Hey everybody, it's Pete. Good morning. Today we're going to look at something interesting. In the current environment right now, it has been a little bit frustrating where false breakouts are driving a lot of people crazy right now. And there's an obvious reason for that. Clearly, the market environment has changed quite a bit. But what we're going to talk about today is minimizing losing money on breakouts that have a lower probability of following through. I know that's a mouthful, but what's going on right now is I'm seeing too many people in the community taking trades where they expect them to follow through, expecting the next big wave to the upside, but they really don't meet the criteria that's showing you right now when you can expect follow through. So there's two things we're going to do. Actually, three. We're going to have a setup where you should be only looking for breakout trades, whether it's a day trade or a swing trade. Number two, we're going to have a signal. So set up a signal. And then the most important part is when not to take the signal. I think that's a big part too, where too many traders are, it's going up, it's going up, it's going up, and you end up waiting for too much confirmation, and then you're late. And then the trade ends up pulling back on you, and you're like, oh my gosh, I feel like every time I put a trade on, it's wrong. So you're probably doing one of two things. You're probably buying it without the setup, and you're probably buying it too late. So timing matters, and you could kind of minimize timing a little bit by having the right share size. And we talk about this quite a bit, where there's a difference between a great environment and an okay environment where you can put trades on, or a really obvious order flow, or where the stock is just going up today. In the community, inside the boot camp, we talk about that being working the order. So when I'm screaming working the order, screaming is relative, I'm typing it. When I'm saying working the order, I'm literally saying these are less than perfect conditions, but I can justify that idea where you believe it's going to move in your direction. So there's a lot to the pieces, but you know what? We signed up for this, and this is how we chose to make the stock market make us money. So we need to have strict criteria because of all the possible things that can happen. We need to only allocate money when conditions line up, and that's kind of what we're going to talk about today. So if you find these videos helpful, definitely click down and subscribe. That would mean the world to me. And definitely join me in the boot camp. Look, we talk about these things all the time, every day. All of the trades we call out are swing trades. It's just a question of whether or not there's room to go in the swing trade. We always day trade those same ideas because if they look better on the higher time frames, obviously they're going to be good for a day trade, right? So we're going to look at one very simple setup, signal, and then anti-signal, I guess we would call it, of when not to take the trade, which I think this last part is an important one, especially for newer members in the boot camp, where I call it the chasing price action, and it's going, and then they're waiting for too much confirmation, and you're buying at the wrong time, essentially, where if you buy down here and you expect it to go up here, the reward potential justifies whatever risk you have to take. But if it stops going down here, and you think it's going here, but you're buying it over here, the reward potential becomes one-to-one at best. And if you take one-to-one trades, that makes you a break-even trader, which is not what you want to be. So let's turn that over to the charts. I'm going to use, first we're going to set it up, and then we'll just go through a couple of examples. But I'm not one who's really big on going through hundreds of examples of the same thing. Once you see it, you see it. So we're gonna basically break this down. We're going to use the 20-period moving average as a qualifier. We're going to use the 50-period moving average as a filter. Then we're going to use individual candlesticks for the trade and individual candlesticks for when not to take the trade. So the first thing we're looking to do is we are looking for when your favorite stock has the 20-period moving average above the 50-period moving average, and they're both trending. That's a big key there. So we're going to actually use the not the cues. We're going to go to Apple, and we're going to look at the setup. Now, Apple and a lot of stocks right now, we're not going to find textbook picture perfect trades because the pandemic basically descended to the upside, where there was just so much buying pressure. You could see the stocks, most of them hardly pulled back at all. So we're actually going to go into one that did trend quite a bit and gave us a signal over here. Now, what I want to talk about is the first thing that comes back usually is I'm having a hard time finding the perfect setup. That's okay. That's okay. Don't you want to put your money in harm's way only when you have perfect setups? I mean, that's kind of the whole point, and that's actually where most traders lose the most money, where they allocate money in poor situations. They allocate money in bad ideas, and then they can't figure out why am I losing money. It's because you shouldn't have put it in harm's way in the first place. So here's what we're going to talk about. I'm going to zoom this out a little bit. I'm going to remove this from the charts. What we're looking for again is the 20 is rising, the 50 is rising, and these are both simple moving averages. The 20 is obviously above the 50. So what we're looking for now is a close on the daily chart below the 20. So that happened here. Okay, it didn't happen here, it didn't happen any of these places, it happened here. So that's the setup. 20 is rising, the 50 is rising, the 20 is above the 50. And your stock on the daily chart closes below the 20. So that's the setup. All three of those components, the 20, the 50, and the close below the 20 is the setup. So you're basically buying a pullback in a scenario in a stock that you're perceiving as strong because of what the moving averages are doing. So now the trade signal is your first well bid candlestick, which is here. Well bid means higher highs or higher lows. So in this case here, there's a higher high and a higher low after the signal. Now, what's interesting here is you close below here, but the next candle is not well bid, so you're not doing anything yet. The next candle is still not well bid, you're not doing anything yet. This is well bid. This becomes well bid. That's the entry signal. So the thing that comes in now is, when do you want to buy this stock? Well, I'm going to go against what I normally do in waiting for the next day. So you have two different entries. When I say against what I normally do, we're going to enter this one early, which means that the well bid candlestick is in the upper portion and closes in the upper portion. So you're actually going to buy on the close. Now, why are we going to buy on the close? We're going to buy on the close because quite often when these start to take off again, you get gaps and you miss the entry, and now you just ruin the reward potential again based on how much risk, right? So in this case here, and let's just say for argument's sake 10%, it has to close in the top 10% of the trading range, and that candlestick is well bid. So you understand what we're saying now. I'm just going to come back over to the screen really quick. So 20 is above the 50, price pulls back, closes below the 20 on the daily candlestick. The next well bid candlestick, higher highs and higher lows, and closes in the top portion of that candle. Now use your judgment. Don't write me and say, is it 10%, 12%? Use your judgment. You want to be a trader, use a little bit of your judgment. Buy on the close. The stop loss will be the low of that well bid candlestick. Here's where it gets tricky. Little pause for effect there, right? Here's where it gets tricky, and here's where the mistakes are made. So if this is the entry, you're buying on, let me zoom this out a little bit. This is the entry, you're buying on this close, assuming you believe that's strong enough. If it doesn't, actually, let's go back a step. If it doesn't close in the top 10%, but it is still well bid, then the high of the well bid candlestick the next day is the entry. Adding that, that's why I said doing two different entries, right? Now here's the thing. It's only valid on that first well bid candlestick after it trades below there. You do not want to buy the third candlestick, the fourth candlestick. You're chasing price. Here it closes again below. No signal yet. Here's the signal. You're buying on this close. If you're not, you're buying above the previous day's high, and you can see the follow through. Now, what's interesting down here is we closed below the 20, got the entry here. It did not close in the top 10, did not trade well bid, did not trade well bid. But now it's happening. This is the last part of it. You're not looking to buy this signal below the 50. It needs to be below the 20, but above the 50. So let's see if we can go into a couple of other stocks that might have had the criteria. Now, August was a little bit of a rocket, so really didn't have a lot of opportunity there. We could probably be looking all day for a great signal. All right, so let's use Netflix as an example. So you can clearly see here that the 20s above the 50, price action pulled back. This was well bid, but closed at the low. Next candlestick invalidated it. This is the first well bid candlestick. So you need to start adding yourself into the trade to determine which of these stocks are best. Now, a lot of people come into the market and like, just tell me exactly what to do. Well, that's like saying somebody, here's a manual. I'm going to give you this manual and you're going to know how to drive. It doesn't work that way. The best trade setups have really strict criteria for when to look at the setup, when to get in, when to get out. But now you need to add yourself to the trade. You need to, well, does it close perfectly? Does it have to close exactly at the high? I just gave you the scenario. 20 above the 50, price closes below the 50. Excuse me, the 20. 20 above the 50, price closes below the 20. It's early. Waiting for that candle to close. Then the next candle, the next well bid candle below that, as long as it closes in the top 10%, you buy on that close looking for follow through. If it doesn't close in the top 10%, but does close well bid, then the next day you're buying the high of that well bid candlestick. It's only within those candlesticks. And again, you don't want to start chasing it because then you're going to be too late. There's a mouthful in there, but it's really very simple. And I just outlined it pretty good. If you have any questions, definitely leave a comment below. The reason I'm bringing this up right now, as I said at the beginning of the video, a lot of traders are getting caught buying breakouts in stocks that are below the 20, below the 50, and expecting them to follow through, which that's the market that we have right now. So we're kind of in day trading mode where you're getting these one-day explosions. Maybe you could trade it that day, maybe even the next day, but they don't have order flow behind them, and that's why a lot of those breakouts are failing. We've actually been seeing that in OSTK a little bit recently. So hopefully this is a little bit of a structure for you. You're going to say, I know you're going to send me some feedback and be like, oh, I'm having a hard time finding those setups. So that's the market that we're in. So you have to get in there and work to find those trades that are probably up for the month, if you want to run a scan, up for the month, but down 10% over the last week. You'll probably find some stocks that meet that criteria, maybe one or two, but how many trades a week do you make? Even if you get 2 trades per day that's set up, that's 10 trades per week. Even if only 2 of those trades fire off a signal and give you a trade, that's still 2 trades per week. And that's a nice way to make a living. That's a nice I guess I'm bringing that last part up because too many traders want to trade for the sake of trading. Wait for a good signal, wait for a good setup, a good signal, and that's where the money's going to come from. Have a great day, everybody.